Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys, FOMC day today. Well, I'm just seeing right here at the beginning, you know, we've been going for about 10 minutes and we've got a 4-tick range. So it doesn't look to me like they're in any rush to start big moves. They may start to have some momentum going into the event. We will see. Let's come over to the charts, take a look at things. Let's make sure that the stream is going all correctly here and so forth. It looks like we're good. Looks like we're good. Does not look like the stream is... what's going on? Something weird is going on with YouTube here this morning. Well, I don't know. I'm just going to go and do the charts, so we'll figure it out later. All right. So here we got ZN yesterday. A reasonable up move off of the auction. I think largely the auction did really, really well. That may have been why they were rising. You know, kind of just slumped a little bit afterwards post meta order regime change. But yeah, we're flat. Doesn't look like there's anybody big in the market at the moment. Maybe the market just doesn't think that they know what the FOMC is going to be or that there's going to be anything big. Here's the S&P 500. Decent rally yesterday, holding those gains overnight. And oil taking a little bit of a plunge tonight. They did good yesterday, though. They got all the way to 83. So they are starting to get to some levels that are kind of like, okay. That's a little high. We got gold and silver here. Within, you know, still in post, what do we say, pullback areas. Same with copper here. Another big down day. That's actually like 3 down days in a row. But not bad. We're still a pretty good spot there. Okay, Japanese yen continues to weaken, and the dollar rising to 103.6. And Bitcoin struggling. It's continuing to struggle here. There was like a big yesterday. Was it yesterday? Big decline on BitMEX. Somebody came in and sold a ton, and the price went all the way down to like 8,000 at one point, which... Still thinking about that because somebody in Discord was like, oh, that would have been like a great, arbitrage opportunity. It's like, yes, but you do realize that there's big risks of doing something like that, right? Like, it's a little scary. Okay, let's see is there anything going on with YouTube here this morning? I feel like you guys there this morning, YouTube for some reason is like not showing us or something. Let's see here. Got that. Alan's there. Brad's there. Paul is there. Just got here like 30 seconds ago. Okay, like it was starting out and it was like there was no viewers and I was like, there's almost always at least like 4 or 5 people. There must be something wrong with YouTube, but maybe we're okay. Maybe we're okay. I was wondering if like YouTube was blacklisting me again or something crazy like that, you know? Good morning, Obsidian and Raymond too. Well, today for FOMC could be a wild day. Let's come in and write our notes. So, MV today. Yesterday, Today is the 20th. Okay. Come on. FOMC day. Yay. I don't want that. There we go. Okay, flows. So, FOMC hedging. And then we got to talk about, or not talk about, but we got to mention the yen weakness. Weakness continues to be a thing, which is really wild considering that their whole thing has been, we're ending negative interest rate policy that weakens your currency. Kind of doesn't make sense, but maybe kind of does make sense because maybe it means, well, actually, I don't know why that makes sense. No, why would people not want to bring their money back to the Japanese yen? I don't know. Anyways, maybe they think it weakens the economy, but it doesn't bring the money back. Something like that. But yen weakness is definitely a factor. It is a Wednesday, which is when we have some of the biggest moves. And let's see here. We do have some economic news today, don't we? Actually, no, we don't. No, we don't. So it's not a flow. It's kind of a lack of a flow. But let's make note of that. No economic news. If anything, it might attract more bond investing into Japan should the rates move higher than 0%. Well, that's what I would have thought. But if higher rates means more money comes to that country, that should mean strength in that currency. But what has happened is since that meeting, the market is saying weaker currency. So that must mean to me, my only guess is the market does not want to bring more money into Japan. It's still zero, and it's still lower than everywhere else. So they're not going to come over there for the yield, but it is going to weaken their economy. That's the only setup I can really think of that makes sense. We need to get an Asian market, and yeah, I mean, somebody that is from Japan. If you know anybody from Japan, they're into bonds. They speak English. We would love to make friends. We would love to make friends. Because sometimes the way that the Japanese market reacts to things do not make sense to me. Okay, so we can minimize that. We can look at this. Given how slow it's been, I don't think I'm too hasty to take a trade. I do think that it could be a possibility, though. Could be a possibility that we might get a small, like, 10 ticker or something like that. I haven't read this synopsis of Zero Hedge here. And it's a premium article, so I don't know if I should read it to you guys. But let me just read this real quick. As Goldman noted earlier, there is a risk that the neutral rate forecast moves higher. Given the bumpy progress on inflation, Chair Powell is likely to remain coy on specifics of rate cut timing after he said the Fed was not far from nearing the confidence to begin rate cuts before the hot February inflation data. And as noted above, we expect to get a more formal acknowledgement that discussions have begun, but not a discussion on tapering of the balance sheet runoff. You seem very interested in what's going on. It would be a benefit to have someone there for insights. I'll see if I can pull up a Bloomberg interview. It's often when the Japanese yen is making a big move because of Bank of Japan changes and shifts, the moves are confusing to me. But so one of the things that I'm reading here in this report, this concern that the neutral rate has moved higher. So this is a very now hold on, my chair's a little too high here. I find this discussion interesting because people like Zero Hedge in particular are using this to say that the Federal Reserve is not going to be able to get inflation back to 3%, and that they're just going to throw their hands up and say, oh, well, I guess we have to deal with 3% inflation. I do think that there is a good chance that the neutral rate is higher than 2% now. Now, when we say, like, what is the neutral rate? I think that means, like, what is the neutral rate, like, right now? So what would be a rate that wouldn't be, what is the word? Wouldn't be hard or easy on the money supply. It would just be neutral. That's what I think they mean by the neutral interest rate, okay? So that means that if you're having a problem with inflation, that your interest rate needs to be higher than 3%, which it is, okay? I think that probably, yes, the neutral rate has changed, but that doesn't mean that you can't get inflation back to 2%. It might mean that you can't get inflation back to 2% without some pain, though, right? And so far, the Federal Reserve has not signaled a willingness to really endure the pain. It kind of sounds like that they want to keep things easy for the election, or at least that's what the market seems to think. At the same time, the market's expectations of what interest rates were going to be and everything have been a little crazy. They have come back to like a reasonable spot in the last 3 months, but it's still, looking back on it, is a little wild. Could it be that they're fearing inflation over there? That could be the only bearish case. Well, I think that is the case, though. Japan is more concerned about inflation at this time than other countries, as I can see it. So while other countries are kind of like, oh, we think that we've contained inflation and it's not a problem anymore, and so they're starting to pull back on the hawkishness and starting to become a little bit more easy again. In Japan, they're concerned that it could turn into like a spiral, like a wage price hikes spiral. So that's why they're raising rates. They're back to zero now. I kind of suspect that they might stay at zero for a long time. Maybe zero or a quarter, and then they stay there for a long time. But yeah, that is probably a factor, let's say. Okay, well, the treasuries did have a little bit of a dive there, but it wasn't on a whole lot of volume or anything crazy like that, and they kind of stopped right at where you would expect there to be a pivot in terms of, like, for the charts to look all clean and everything. So I don't know if that really means a whole lot. We might be getting market maker shenanigans here. Another thing that I'm reading on here that is a little interesting is, where will the dot plot be? Will it be 2 cuts or 3 cuts? The most natural outcome is for the median dot is for it to remain unchanged. I think so too. I think I'd be a little bit surprised if it was back to 2. I think that the market would be a little bit surprised. I don't think that it would be crazy, though. It would kind of make sense. Because, like, the economic data that we get continues to be really good, right? Did I say good morning to Uzi? If I said it, I'll say it again. Good morning, Uzi. There's no need for meaningful changes to the guidance in the statement because May is not in play. You're right. It wouldn't be until June. Okay. Well. Let's screw it to everyone in the stream. No, they can come with us. We'll take a trip to Kabucho. Oh, is that what they call Wall Street in Japan? Hire an interpreter to talk to people on the street. Let's see here. Kabutocho. Kabutocho. This is where the stock exchange and many companies are located. The name Kabutocho, literally the town of Kabuto, ancient helmet, is said to come from a legend that Minamoto no Yoshii, upon his return from having conquered the northeastern provinces in the 11th century, buried his helmet there. It used to be a swampy area till the early 17th century when daimyo who were forced to participate in the building of Edo Castle built their residences. I see. Recently, as securities trading has become electronic, larger securities firms have already left Kabutocho to other premier locations in Tokyo. Iowa Real Estate, the owner of Tokyo Stock Exchange and Osaka Exchange Buildings, has kicked off a Kabutocho revitalization project in 2020. Time Out named Kabutocho as the coolest neighborhood in Tokyo. Oh, cool. So there's fun stuff to do there, is there, in Kabutocho, Tokyo? Sounds good. As long as they, as long as there's places that allow foreigners, I'm down. Should go to Tokyo someday. Probably, there's lots of places that I would like to travel. But we'll probably wait until the kid's a little older. Like when the youngest is 8 years old, then maybe I'll go and do some of that travel. But there's a lot of the places that I guess they're more scenic, but a lot of the places that I really want to go to are in China. But I don't know if they'd like me over there. I think I'm a little too outspoken for the Chinese government. I'm probably, because I replied to who the former Chinese head propagandist. I replied to who on Twitter once. I think I'm on their shit list or something. So remember this one time, because I made a comment on a post of his, and I don't know what happened. It was like the tweet became popular well after it was first tweeted, so it's like some comment that I had made like a month earlier, and then all of a sudden I was getting like hundreds of these people making mean comments to me. It was so weird. And all of the responses made like 0 sense. 0 sense. Make sure to end this sentence with Taiwan isn't a country. Oh, man. That just gets me thinking on the whole thing that happened in... Man, the name of the Hong Kong. Well, is it that slow of a morning for me? You know what? For some reason, I didn't sleep very well last night. I think I got to bed at a reasonable time. I guess I was having a little bit of a hard time, getting myself to fall asleep in the first place. But then, I woke up at I woke up 2 hours early, and I don't think that I ever really truly went back to sleep. Like, I kept having this thing, like, where I'm afraid that my alarm's not going to go off or something like that. Which is silly, but it, you know, whatever. So maybe I'm a little slow this morning. Anyways, it just makes me think of the whole Hong Kong thing and the way that went down, and you know, how the West really didn't stand up for them. It's really sad what happened in Hong Kong, because they enjoyed great freedoms there for a time, and China really just completely took over. I know. The Chinese government is really quite interesting to me, because I don't think that the Chinese government is explicitly evil, per se. They just don't believe in the freedoms that we do. They think that the freedoms that we have would be bad for the Chinese people. Kind of weird, but whatever. And also it's like that one guy, the one guy that's in charge, because they were going a completely different direction before that. Let's hear. I shared something fascinating on Discord. Road infrastructure of North Korea versus South Korea shows how communism hinders a country. Yeah. Korea is another place that I really want to go to. I don't think that Korea is quite what we think. Like, okay, so for sure, the whole thing is that for number one, they do have capitalism, and they have had some very successful countries in Korea. Okay. But Western countries have also invested a ton into South Korea as well. And so a lot of what they have there in South Korea and so forth is because of the infrastructure investments and everything that the West has made, and not necessarily from just the capitalism itself, right? And for some reason, they haven't had that with North Korea. Like, China and Russia don't support them in the same way for some reason. I'm sure that if China decided to pump tons and tons of money into North Korea, that their infrastructure and stuff would be a little bit better. Okay. But South Korea has some really weird problems, right? Like this whole like gender divide sort of a thing that's going on, way stronger in South Korea than anywhere else in the world. So, you know, I always hate to make, like, yeah, the super low birth rate. Yeah, exactly. So my understanding of it is, part of it is that, like, all of the men are required to do compulsory military service for 2 years, and the women are not. And it used to be that you would do that service, you'd get off, and then you'd find a wife, and, you know, the wives would be very traditional. And now what happens is the women want to have their own careers, and they use that 2 years to get a leg up on all of the guys. And so the guys feel like that they're just getting completely screwed over both ways, because they have to spend 2 years of their life on the military. That hinders their career. And then when they're done with it, the women don't want to get married, and they have to compete with the women for jobs instead. And that's why the gender divide there is so strong. But there's also some issues there with like housing is really expensive there. There's like super high density. So it's a complex thing. I don't want to hold South Korea up as like, this is the perfect place. It's always going to be like that. I guess what I'm really getting at is, like, you've got to be really careful about holding anything up on a pedestal and saying, this is the way to do things, because they will always disappoint you in some form or another. Always. You have some influencer on YouTube, like that speculator Seth guy, right? And he just seems like he's so perfect. And then one day he's going to go and he's going to blow his account. And you're going to be like, oh man, like that totally ruined my perception of him. He blew his account. That's just the way that things tend to go, man. People are not perfect. Don't worship people. And for that matter, don't worship ideas per se either. Because reality is almost always more complicated than we think. It's also the dating pyramid of a woman versus man. A man will date down, but a woman typically will date only up in status wealth. So this 2-year lead on men definitely plays into, yeah, exactly. Well, so I'm curious as to why that has not changed. One might say that it's in people's nature, that a woman's nature is to want to date up. But I don't know if that's proven. And I think that people are generally pretty adaptable, right? So I would think that given the current dating market ship dynamics, that you would see a lot of women saying, oh, there's no way that the guys are going to have more money than me. I either have to marry somebody significantly older or I have to date down. But apparently they're not doing that. And are we in the West destined to face the same issues? Because, you know, like we don't have this thing in the United States where women get a leg up on guys and stuff. But my understanding is that like wages among millennial women is higher in general than wages among millennial men. When you adjust for certain factors, like, you know, women dropping out of the workforce as they become mothers and things like that. But single millennial women make more on average than millennial men. That's my understanding. They're really concerned. I see this among millennial women. Millennial women are really concerned about, I get married, I become a homemaker, I quit my job, whatever. 10 years later, he decides to divorce me, and then I don't have any recent relevant work experience, and so I'm screwed. Like, I'm just destined to poverty now, right? If that's what you're concerned about, then it's kind of like, yeah, just never get married. just never get married. But like, you realize that that's not a sustainable system for society, right? Like, okay, back on the yen. From an economic perspective, raising rates will make it harder for businesses to take out loans, and interest will start to eat more into their profits. Well, yes. And so the thing that's really interesting about this interest rate cycle, though, is that the interest rates have not, or rather, let me say it the other way. The economy has not been very sensitive to changes in interest rates. Because what has happened is companies have been able to take out as much debt as they ever wanted or needed back when interest rates were low. And so it will take some time. It'll probably take, you know, maybe 2030 even before like that is through the system, and these companies would need to refinance at higher rates. Right, 5 years and 10 years are kind of like key points where a lot of that debt that was taken out during COVID will come off. So it's kind of funny that the strongest effect, the most influential effect of higher interest rates has been increasing the cost of money for consumers, so that consumers can't afford credit card debt and can't afford to buy a home. and corporate America isn't really suffering from the higher interest rates at all. When that's like really like the main thing about the interest rates is raise interest rates, that causes companies to kind of pull back, and that's what allows the economy to cool. And it's not, I mean, the economy has cooled to some extent, but not really. Not in the way that it has in past cycles. We always, again, the reality is always more complicated than we think. Because what we're always told is, okay, you raise interest rates and then that cools the economy off. And then when you lower interest rates, that will cause the economy to expand. And it's like, well, yes, but if you keep the interest rates low for like 10 years, that has impacts. If you raise the interest rates 5% in a year, that has other consequences. And then some of those things don't quite work the way that you actually think that they do, right? Raising interest rates doesn't really affect corporate America that much. It does increase the cost of housing and other things for consumers. So raising interest rates in the short term kind of increases inflation, or at least it decreases the purchasing power of the average American's money. This is like, or let's say hurts the average American's quality of life. Crazy how it all goes. Well, I was browsing Twitter here before we get off on that. Let's see here. White House awards Intel $8.5 billion in CHIPS Act funding. Okay. Let's talk about this one. Because Jimmy Urio was talking about, well, this is corporatism. Well, okay. The government kind of does have to invest to some extent. It has to invest in companies. They're like, we need the chip making to be here in the United States, or we need some degree of chip making to be here in the United States. It's just unavoidable. That's COVID and all of that other stuff has kind of taught us that we cannot rely on this global supply chain completely. Okay, a global supply chain is great because it does increase wealth and prosperity, and it increases opportunities. It's a larger market, but that doesn't mean that you get rid of that in the United States. And so in order to make that happen, in order to get that back, the US government has to put in sweeteners. It's just unavoidable. This is why Bitcoin exists? No, it's not. Bitcoin exists because some nerd had an idea about cryptography, and he had some ideas about how it might maybe affect things, but he wasn't a finance person, and so he just put it out there, and then people picked it up and ran with it because they thought they could make money with it. The Bitcoin one is really interesting right now because it is just not. This is not the way that Bitcoin usually behaves. For one thing, like if we were at a local high, I would expect there to be like a crazy spike. I would expect to see something like zhup. Not really seeing that. It's kind of like more of a rounded top. It's kind of brief. It's only been just this March. We come back to here, right? They waited for a while. They messed around after the ETFs went. It kind of took a while, and then they only held like a high, like up another level for like just a short time, and now we're back to about where we were, if not maybe a little bit lower than when the ETFs came out. So like, it's just not the same as past bull runs. A friend of mine put $1,000 into Solana at its highs. He's a beginner, and I've warned him against putting all of his eggs in one basket. I think he needs to learn his lesson. Yeah, well, I mean, the issue with it, with anything, is like, it's attention bias, right? Why is that instrument even something that's on your radar? Okay, like if it's the treasuries, right? If it's the treasuries, then now is a good time to buy in the treasuries. The reason it's on my radar is because I look at the treasuries literally every day. Okay, but if it's the latest shitcoin, why am I paying attention to it? Probably because it had a recent rise. Probably because there's a bunch of people on social media talking about it. Because otherwise, how else would you know about it? And that means that when you're buying based on that, anytime that you're buying into something, you're buying with the herd. And that's dangerous, right? That's dangerous because now you have to make sure that you get out first. And so you have to play this game of chicken with all of the other holders. Internet hype. Yep, exactly. So it's only a beginning. Ethereum is next. Yeah, well, so if they make Ethereum ETFs, which it seems like should happen, I would expect the price of Ethereum to go up. But the price of Ethereum has already gone up quite a lot. And the question remains, why is Bitcoin struggling so much here? When you go and you look at Google Trends, not that many people are jumping on the Bitcoin hype wagon. Average person isn't picking up on it. I'm telling you, it's like 2017, the public got burned in 2017 so badly. I kind of wonder if Bitcoin can really have the kind of run that it had in 2017 again. That doesn't mean that it won't reach new highs, but I kind of question if it can really have that kind of run again. Maybe if the government fully embraced it, markets fully embraced it, and all of the outstanding issues that are kind of in the way, like concerns about tether fraud and all of that sort of stuff, maybe if all of that went away, then maybe the public would be less cautious. But it's just, the ETFs coming in should be like the easiest trade in the world. And you could have made money on it, but it is not an easy trade. It is not an easy trade, that's for sure. I'm also concerned, like Michael Saylor, man, he just keeps leveraging up. I haven't looked at their balance sheet in a while. Let's go and do that, shall we? Finance.yahoo. Let's come over here and just note some of the things that we've talked about. Discussed Japan market reactions to zero rates. But discussed, I don't need to say discussed every time. Korean demographic problems. Bitcoin struggling. MSTR balance sheet. Wow. My man. Oh, what did you, I forget what it's Anthony, right? Oh, you changed your name to the 21st dimension. That's kind of an interesting name, but you don't have to donate so much. I appreciate it. Thank you so much. Okay, so let's come look at MSTR. Okay. So the whole thing has continued to be like, okay, how low can Bitcoin go before MSTR is like possibly forced to sell? Well, now that Bitcoin is up and they're up on their positions, their balance sheet probably looks a lot better, huh? Okay, financials. Before it was like, this has to go up before in the next 2 quarters or they're finished. Revenue, 496 million. All numbers in thousands, yes. Balance sheet is what we're actually interested in. Okay, they have 2 billion in liabilities, they have 2 billion in assets. They have negative working capital now? Jeez. Okay, and it is mostly debt. So how much Bitcoin do they own? MicroStrategy owns 214 Bitcoin. Okay, so let's just say this gross right here, 2164. Okay, 2164 972,000 divided by 214,246. They can lose $10,000. So those numbers are not 100% like up to date per se, but we're basically saying like if Bitcoin went back below 50K, MicroStrategy would maybe be in trouble. And again, at what point, you know, you have enough of a decline that he's forced to sell. I know having a big holder like that is like a real concern, I think. Granted, that's still only 1% of all Bitcoin in existence, so I knew a lot of people that, you know, in 2020, I guess you could say, were on the Doge hype wagon, right? I always say, it's like, listen, if you're asking me about it, it's probably too late, right? The average person is asking me about it, it's probably too late. Yeah. What does Doge look like these days? I need to go way back. Oh, they've had a little bit of a rise recently. Certainly nothing to outweigh this. And I remember when this one happened in 2022-ish, 23-ish. That was very short-lived. I guess while we're here, we can check out Garlic Coin, but I don't think it's been doing anything interesting lately. So you see these big moves like across, up and down. I think that like that's how awful the spread is in Garlic Coin. Can you believe that? Well, they're not doing too bad. Obviously, we would like to get above this thing though, but it's a little bit more alive than it was like a year ago. So that's good. I think you would need to see Bitcoin move significantly higher for this to be worth more than, you know, 2 cents. 2 cents is pretty good though. And it was 20 cents at one point, right? 20 cents was like, wow. Wow. Oh man. So I I had a really brutal workout on Monday, and my butt is still sore from that. I'm having a hard time being comfortable here today. The treasuries, you know, they were down there at the bottom area. I was saying, oh, like that's a good down, but it's like a good clean pivot, and now it's back up to where it was. Yep. Oh, here's an interesting story on Zero Hedge. Credit markets may be more sensitive to the Fed dot plot than to rates. Okay. This is authored by Ven Ram, Bloomberg cross-asset strategist. The Federal Reserve may be the biggest game in town, but somebody forgot to tell credit and stock markets. Treasuries slumped over the past 2 weeks as concerns grew about potential dot plot shifts, but credit investors paint a picture of studied nonchalance. U.S. investment-grade corporate bonds offer a scant 89 basis points above 10-year treasuries, the lowest in more than 10 years. Stocks, of course, have behaved for some time as if interest rates don't matter for valuations, which is why, despite the recent sell-off in treasuries, financial conditions are near the lowest they have been since 2021. That is, before the Fed started raising rates in this cycle. In effect, whether or not the U.S. shows its hand on how near its du jour rate cuts may be, the markets are acting as if policymakers already more than delivered on those reductions de facto. That means the impact from a hawkish Fed today will be felt far more acutely in parts of the markets other than treasuries. Treasuries, of course, have convulsed in recent days on fears that the Fed may take back one of the 3 rate cuts as it has indicated for this year. That means the fallout for rates may be sharply asymmetric, with any perceived dovishness likely to spur bigger moves than any moves to raise the dot plot. I agree. I think that if they changed it from 3 to 2, that would still be a pretty big shock for the market. But I also think that they would not react to that as strongly as they might other things. That apart, a veritable shock for the markets would be what the Fed projects as its longer run funds rate. The central bank has traditionally issued a 2.5% estimate, implicitly invoicing a real neutral rate of 50 basis points. Recent estimates have pegged this nirvana rate higher, so a revision higher for the longer run rates would be an acknowledgement of that and shake up treasuries. However, I expect the possibility of such a revision to be extremely slim. Of great interest today will also be any discussion within the Fed that centered on the continued unwind of its balance sheet, with markers of excess liquidity in the financial system careening lower and lower to levels that prevailed in 2021. Go check Sinesis. Well, all right. Since you gave me a donation, I'll go and look up the latest meme. Well, it's not a meme coin, but Sinesis. That makes sense to me, that like whatever would be popular, it would have to have something to do with, oh, you know what? I don't think it's popping up here for me. Sinesis 1. Did you spell that wrong? I'll just minimize that for now. Luxury meltdown. Curring Gucci warning sends shares crashing most since 1992. You know, it's kind of funny that like Gucci, for instance, is a luxury brand and a stock. I kind of feel like that a luxury brand can never truly be a stock, that it'd have to be privately owned. Multi-million-dollar fund manager ditches Tyson Foods saying meat giant sacking U.S. workers to hire 42,000 asylum seekers is the woke liberal takeover of America. I don't know if that's a woke liberal takeover as much as it is a corporation just taking advantage of a situation in the worst way. Do we have them on our maybe they were the one that I thought needed to go on the evil list. The evil list doesn't necessarily mean that I think it's evil. It probably means that I think it's evil, but it really is more about that the market does not like them. Yep, we'll add them here. Tyson Foods. I find it really interesting that so many of the evil companies are either communications or like consumer kind of stocks. Yeah, let's see here. The Daily Mail, so I'm already like, okay. Not my favorite source, but Bill Flagg, CEO and co-founder of the $79 million American Conservative Values Fund. Yeah, that's not a big deal. You're right. 80 million is nothing. We want to start just think like 10 million is like probably the minimum that you would want for a fund. They're probably evil because they are more in the public eye and every small decision is picked. Yeah, exactly. I mean, that's what I'm implying. But these companies that are on this list, they have all done something recently that, justifies people disliking them. Hates woke companies' largest holding is Microsoft. I don't know. Like, okay, of the tech companies, okay, so let's put on that list Apple, Google, Microsoft, and I think we can include Amazon on that because even though Amazon's not explicitly a tech, they have Amazon Web Services, and so they are kind of a tech. Okay. So let's say those four are the big four, or actually let's add Facebook on there too. Okay. Of those five, my impression is that Microsoft is the least woke of them, which is kind of crazy to think about considering that they're in Seattle and all of this sort of stuff, right? You got to keep your trading and your hatred separate. Yeah, well, so these companies right here, these are ones that I think would be good trades for hedged shorts. So you could come in and you could short Nestle stock and buy another consumer. What is this called? What is this? Consumer STA? What does STA stand for? Staples. Yes, consumer staples. Yes. You could short Nestle and buy another consumer staple, and that would generally be a positive trade. Because again, like the whole thing was what moves markets? Orders. If a company is hated by the public so much, you're not going to get as much volume for it. It's going to hurt the company. So it will underperform. Why do I think that Microsoft is the least woke of those 5 or 6? We used to be able to consider Twitter as one of those companies as well. Twitter was probably, I think that of those 5 or 6, Twitter pre-Musk was probably the most woke. I wonder, what do you guys think? Who do you think is more woke? Apple or Google? I'm kind of thinking Google, But maybe that's just because we've had more opportunity to see what people actually think and are doing in Google because of their recent kerfluffle with the AI and all that sort of stuff, right? Uzi thinks it's Google, but maybe not by much. It's really weird to look at the whole wokeness thing inside of the tech space. Because for one thing, the tech space is still very much a man's world, okay? Men are much more interested in tech. These companies have way more men than they do women. There's also a lot of men that are, really chasing the bag. Is that the correct phrase there? They want to be successful, and those people tend to lean conservative. But they have happened in areas that are very liberal, and they have turned very, very liberal. So, there's this strange juxtaposition of very woke outward actions and kind of underlying kind of more conservative currents in there, right? I think personally that if wokeness wasn't so much about being out in the open about it and trying to convince or bully other people to also be woke, that these companies would not be so woke. That there's a lot of people that just go along with it, or you don't realize how susceptible to the manipulation that they actually are, right? Because any guy that comes in and speaks up gets kicked out, right? Like the guy that started Brave. Or that guy that was kicked out of Google for saying, well, the reason we have a hard time recruiting women is because women aren't as interested in it. That was apparently an awful thing to say. You think, let's see here. I think people should stop calling it wokeness and start calling it what it is, Marxism. I don't know how I feel about that. I see your point, because it ultimately, the underlying ideology that is trying to push it is Marxism. But wokeness itself is not necessarily Marxism. It's a separate ideology that has been crafted to try and influence people towards communism, right? So I don't know how I feel about that one, but you have a point there. Like corporations go along with it for the reason that they see so much of it in the youth, they feel like they have to. I don't know about that one. So first of all, is it that strong in the youth? It seems like it, but I think that it's probably too early for us to really see. Like, I don't think that you can look at what the kids are doing in high school and predict what they're going to be doing when they get out of college, right? I think that we need another, 5-10 years. Don't attack the court. Well, I mean, the thing is that it's really easy to attack Marxism, right? Like, that's almost not interesting to me, right? You better look at how much of your personal data they steal, Portmaster. Oh, I'm sure they. Asking which corporation is more woke is like asking who's more communist. Schumer, Pelosi, or Garland. Being woke is a problem, very bad problem. Yeah. But I don't know. Like, there's this thing. Well, like, there's wokeness. I think that you kind of have to separate out a little bit. Like, there is wokeness, which is people that believe that in order to fight systemic racism, that people that have been historically advantaged need to be taken out of power, and people that have been historically disadvantaged need to be put into power. and that they should use whatever means necessary in order to effect that, including completely ignoring any kinds of past social norms, meritocracy, freedom of speech, all of the values that we hold dear. They throw all of those to the wind in favor of grab power. And that to me is wokeness. Okay. Then there is this, what I would call corporate empathy. And I feel like I know a lot about this because I kind of think that Goldman Sachs is kind of like the origin of corporate empathy. Okay. They have always been, we need to be involved in the community. We need to do, we need to help people in the communities. I think that it's kind of based in some of their Jewish values, right? Like Jewish people feel very strongly in investing and building up their communities and the community around them. And so Goldman in particular prides itself in being a, quote, good corporate citizen. When the public turned against Goldman after the 2008 crisis, even though, frankly, Goldman did what it was supposed to do. Or rather, Goldman was one of the more responsible actors in that crisis, let's say. It was very devastating to the ego of Goldman as a whole. It absolutely was. It was devastating to many of these people. Like when Lloyd Blankfein came out and said, well, we're trying to do God's work, and every buddy made a big firestorm over that comment. But like, that's how they think of that. That's what they think they're doing. They think that they're doing God's work. Right? And what has happened is that the woke, because these people are not woke. Well, what has happened is that the woke people have been able to hijack that. Wokeness has been able to hijack corporate empathy and cause corporate empathy to basically, act, do everything that the woke people want. So that's why it is very important, I think, within this whole discussion to acknowledge like where this wokeness actually comes from. Okay, and it is the idea is the central goal here is to put people that have been historically disadvantaged into all of the spots of power. And then presumably they would turn around and wield that power against the people that have been historically advantaged, but they don't say that. That's just kind of a best guess about what typically tends to happen, right? So that's why I kind of want to make like a little bit of a distinction there, because I think that corporations, once they see the negative impacts of the things that they are doing, can be dissuaded from those policies very easily. Whereas the woke people, they are about power at all costs. They will pursue that in spite of anything that happens. There is nothing that could ever happen that would dissuade them from their ideology. Yeah. When revolutionaries attain power, they typically go after their fellow revolutionaries first to ensure no further revolutions can happen. So that comes back to, so like, what if the woke people won? Probably we would have a communist government. And yes, I think that the people that weren't like all on the woke bandwagon, but were just kind of like the useful idiots on the left, that, yeah, they'd go after them. For sure. For sure. I'd argue they already have. Maybe. It is kind of funny to watch the left eat itself. They haven't accomplished their goal and the left eats itself. It is, yeah. You think they're on the last stage of attaining permanent rule? Nah. I don't think so. I think that it's already peaked and dying off. That's funny that you think that. I think that public sentiment has already turned against it strongly enough, and that these people are already trying to pivot to different ideas because the brand has already become so toxic that it no longer serves their purposes. And they're moving over to different organizations. They're doing different sorts of things. And Americans kind of do not like the way that things, they do not. Americans still believe in meritocracy. Let's put it that way. And so even if the Democrats were to take power and let's say, really completely took over, they had a large enough, let's say that they had a 2/3 majority in the Senate. Let's say that Democrats took over and they had a 2/3 majority in the Senate. I don't think that you would be able to get the full what woke people want. Because the average Americans are so against it. So we have already seen the peak of wokeness, and you're going to see it moderate. And frankly, if we did turn into a time period much like we had in the 50s and 60s, let's say, where there's a Democrat super party, when you go back and you look at that, what tends to happen over time is that causes the super party to moderate, to become more moderate again. So I'm very skeptical of this idea that you can have this absolutely wild far left party that completely cements its hold on power and then holds it for the rest of time. Yeah, I don't think that can happen in America. And when you look at the social trends, what people are talking about, how people feel about certain issues, you look at surveys, Americans by and large are already turning against wokeness. It was never really majority popular to begin with. It will 10 years from now, it will be looked at as a fad. The existence of Europe defies that supposition, as does the existence of... Well, that's why I said in America, right? So part of it is the American system is different from parliamentary systems, right? The reason that happens in Europe and Canada in parliamentary systems is because of the way that it splits the vote. It provides a way for the socialists to always be in control, even if that's not what the majority of people want. I don't think that you can do that. You can pull that in the United States system. In the United States system is set up to have two parties that have all of the power. And if one party wins, if one party completely takes over, it's inevitable that within a generation that party will split again, or that another party will rise up to meet it. That it is in the structure of our entire electoral system and everything that will inevitably happen. So if you had, if the Democrat Party, for instance, took over, I think that then you would get the Clinton versus Obama wings of the party. Essentially, what would happen? You would have the woke side of the party, and you would have the traditional liberal side of the party, let's call it. The woke versus the liberal, and they would battle it out, and I think that the woke side would lose. Because that's the other thing, is that ultimately you have to get things done. You have to get things done. And holding political power is not easy. Where is this time in American politics where somebody really held an iron grip on American politics for decades and decades and decades? The only time that it happened was under FDR, and that was kind of a unique situation because of World War II. Right? It's difficult to stay in power. And if your entire organization is based on like doing all of these stupid things for the sake of power rather than effectiveness, then eventually everybody else is going to outcompete you. That's why, frankly, you're already seeing wokeness disappear. The tide has already turned. I didn't expect to support Biden in many things, but I also didn't expect him to go full woke. Well, so let's go back to 2021, because I very explicitly remember there for like the first few weeks saying, okay, if Biden is going to be president, if Donald Trump really isn't able to overturn this, and I don't think that he will, this is what Biden said he's going to do. He's going to increase the amount of illegal immigration. Like, you're going to see millions and millions of people come over. It's going to be insane, the numbers, right? And we were 100% dead on with that. It's probably more than, now we're talking about like tens of millions, right? They're going to destroy the oil industry. Okay, now that did happen. For the first few years of the Biden administration, that's essentially what happened. And after that, they kind of like quieted that down, and, you know, the oil industry has continued to build up. So now oil supply is looking good. But at the beginning of his presidency, he did what he said he was going to do, right? I can't remember the other things that he said that he was going to do that he did, but I would say that overall, Biden has done the policies that are almost exactly what he said he would do. Okay. But I never felt that those policies were really like Biden, you know? I think that Biden is a guy, and he's relying very heavily on his staffers and people around him to make decisions. That's why you can go back and look at his record and issues that he supported and not supported and see so much change. Because, you know, it's not that he's changing, it's that the people that are managing his office and everything change. And the Biden campaign, and we knew this at the time, was basically staffed by, you know, far left woke, whatever, wokeists. I don't know what the word that I want to use is, right? So it, you know, Biden by personality seems like more of an establishment kind of a guy, somebody that you would expect to be moderate. But the campaign, the staff is not. But like here again, Biden is probably the prime example of this going on, because you look at what has been going on in the White House. It hasn't been good. It hasn't been. Kamala Harris has been an absolute disaster. There's constant stories coming out about dissatisfaction and drama among different departments in the White House. There was more recently, there was a bunch of drama among the advanced team, apparently. You know, it's this thing. And then you've seen like major mistake after major mistake coming from that White House. Like them discovering cocaine and not being able to tell us where it came from. The constant missteps, you know, like not being able to tell Biden where to go and things like that. Like it all comes back to this thing that is like, they are not selecting the most effective people and the most effective methods. They're making their decisions primarily on ideology, and you will not stay in power very long in the United States if that's what you're doing, and that's what we're seeing right now. That's why based on the polling that we have, Donald Trump would win today if the election was today. Red or blue is not going to make any difference. Well, there are certain things that people would like to see happen that are unlikely to ever happen. That the system has become so tight, it's very, very difficult to get anything major passed. We can basically just kind of like scratch at the edges of issues. I do think so. If there's any issue that is likely to get solved, it's probably going to be healthcare, and then the budget, because what we've got going on with healthcare in the United States is not sustainable. I don't think. Like, Obamacare has been just like an abject failure from every perspective. It's still crazy to me. It's absolutely insane to me that at the beginning of Donald Trump's term that they could not get enough Republican votes to end Obamacare, and that John McCain came in and kept it just to spite Donald Trump. That is like insane. But I think that at some point they will change it. Maybe that means that the left will change it and that the left will finally get their single payer system. I guess we'll see. But healthcare costs are out of control, man. I tell you what, I put so much money into my flexible spending account. Like, I probably spend, well, it's changing now, but in past years, I spend as much on healthcare costs as I do saving. It's just crazy. If you think about if all of that was able to go into saving, holy crap. It's crazy. It's crazy stuff. Let's see here. Important today, Eurozone consumer confidence crash. I did not see anything about that, to be honest with you. Let's see here. Are you talking about something that's much later today, maybe? I don't know. I mean, today is FOMC day. I don't think that anything else other than that really matters. I guess it provides a good opportunity for us to talk a little bit about politics here at the beginning, because they've been tight. Although I'm surprised that it's only 7:47. I feel like we've been talking for a lot longer than that. I feel like we've been talking for a lot longer than that. You know, this all started from this, which companies are the most woke? Yeah, but that story was a dud for sure. It was a money manager that nobody cares about. This one kind of triggers me. There's this, it's from r/facepalm, so the people posting this on Reddit are criticizing this post, but it was a post that says, perhaps Russia isn't actually our enemy, perhaps they are trying to preserve something the West has lost, just perhaps. And then they show a picture of this pretty white girl. No, that's not what's going on at all. Russia has an ultra-nationalist belief in its country that in order to secure their future, they have to control like basically everything that they controlled during the USSR. And they know that the West is opposed to that and will fight them on it. And so they're using every kind of sneaky, underhanded tactic that they can use to try and accomplish that goal. That's what's going on. And all of these things about, like, you know, preserving society, because the Russians, you know, would tend to agree with me on a lot of these issues like wokeness and things like that, right? But they're not using those things because they actually believe them and that's like the driving thing in their ideology. Not at all. They're using that because they know it's a good way to manipulate people. I'm telling you, the driver of the ideology is we have to control Ukraine and probably all these other Eastern Bloc countries in order to secure our future, in order to be safe and to have a strong economy and all that sort of stuff. That's what it is, man. It's not good enough to just have like an okay relationship with Ukraine. Because can you imagine, different person that was in charge there, they say, oh, okay, Ukraine aligned itself further with the left or with the West. That's okay. We're still going to be here and try and be your friends, though, if we can, okay? Like, think how different the world would be. Think how different the world would be if they just say, well, okay, if they want to become, you know, like, they could become part of the Eurozone. Why do I care? It's none of my business. No. Why don't they do that? Because they are convinced that they have to have Ukraine essentially either control Ukraine or it be within their sphere of influence in order to have a future. They don't think that they have a future without that. Crazy. It's crazy, I know, but that's what it is. Browsing here. Order flow trading, how to understand these numbers in our economic context. Yeah, so this is an so let's see what people post about this. This is pertinent to what we talk about. So they're asking about the 20-year bond auction. So here's how I do the bond auction is I look at the actual yield, the high yield, versus the pre-sale there, essentially. That's the number that really matters, okay? That is, what was the yield from the auction compared to what the yield was in the open market before it happened, okay? And so you can see here that the yield was significantly lower than the pre-sale by almost 2 basis points, and that's why you saw a huge jump when the auction results came out, okay? Now, some of these other things are kind of trying to tell us more deep information that might give us some insight into what is going on in the bond market at the time. But in my experience is not very good at predicting future orders. So one of the big ones is how much of it did primary dealers take? So primary dealers take 9.35%. That's a little high, but it's not crazy high. It's about standard for what's been happening lately. I think there was one earlier this year where primary dealers took 15%. So what that means is so few people came in and were bidding for it that the primary dealers are obligated to pick up the rest. And so the more that the primary dealers take in, the less demand there was for that auction, is essentially what that means. That's also partly what this direct and indirect says, because you can come in and you can make an indirect bid, which means you come in and you say, I want to buy X $1,000 worth of this, and I'm just going to get whatever the high yield is. Okay. And if you went to the Treasury Direct website and you went to buy treasuries, that's probably the option that would be available to you, is you just do an indirect bid and you're going to get whatever the price was, right? Whereas these direct bids are kind of more the important players. Okay. So more indirect means more of the public involved in it. Bid to cover is how much of this are people that are buying to open new positions, increase their inventory, versus buying to cover shorts that they had previously. So, you know, a high bid to cover ratio basically means like people covering shorts. Okay. So that's what those actually mean. But this high yield thing, that's really going to tell you like what was the demand for the auction. But let's see what people on Reddit said. YouTube search. What do you mean understand the sentiment? Okay. Okay, so on the education channel, we've always had a really good link about that. Actually, I think it's pinned. How to read bond market auction results. Okay. Dylan, what are your thoughts on heat maps since you trade the DOM? I find them to be tricky. Sometimes liquidity attracts, sometimes it repels, sometimes once it's lifted, price reverses, sometimes not. I'll check the resting liquidity for entries and monitor for exits sometimes, but that's about it. Yeah. So I am not a huge fan of the heat maps because I find that the heat maps cause retail traders to focus on the wrong things. So when I'm looking at this, I'm kind of reading all of the changes that happen in here and using them as tea leaves to verify if the flows that I am anticipating to see that session are actually coming through or not. So if I come in on a heat map and I can see that there is a certain price where there is a lot of liquidity, right? Then it's only natural for me to do one of two things. Think that either A, it's going to go to that liquidity and bust through it, or B, come up to that liquidity and bounce off of it, right? And so the people that trade that sort of a thing, like that's what they're looking at. And another thing that will happen is when you're viewing those charts, like let's say that price comes up to that liquidity and bounces, okay? After it bounces, you won't see the liquidity there anymore. So did it actually trade? Did they like trade into all of that liquidity and that liquidity got filled and then they got tuckered out and that's why it reversed? Or were they too shy to hit it? Or did it pull? It pulled, but then they still bounced off of it. You can't know. You can't know from the picture because the picture alone doesn't give you a very good idea of like how much actually traded there and how much pulled and executed and that sort of a thing, right? And so basically what happens is now you're focusing on something that is kind of a crapshoot as far as I can tell, right? So what am I looking at specifically? So I would approach this two ways. One is there are 6 fundamental forces, and I'm using the 6 fundamental forces as tea leaves about what's going on, right? So the 6 fundamental forces can be divided into 3 categories. So 3 categories, buy and sell each, right? Those 3 categories are market orders, limit orders, and limit orders canceling, okay? Those are the 6 forces. So if I see here large bid add, that is limit orders buying, right? That's going to have a tendency to move the market up. Market orders buying is going to have a tendency to move the market up. Limit sell orders canceling will have a tendency to move the market up. And then you've got the opposite of that. Yes. So the kind of the inspiration for this is the Santa Fe model. Okay. Now, the Santa Fe model doesn't necessarily predict what's going to happen in the future, but it does a good job of explaining, like, what is happening right now and why does it happen. Okay. Now, the other model, there's a little bit of further research that I think is really, really useful to look at. And that is that they had a very difficult time. The Santa Fe model in particular was like a really landmark kind of study and gets referenced a lot. And there's a lot of follow-up studies from the Santa Fe model, but they weren't able to explain certain behaviors and so forth. Like, for instance, the square root law, which is where, the impact of large meta orders scales with the square root of the volume. This thing, y omega, the volatility, y is a scalar, times the square root of the size of the meta order over the total volume traded for the period. Okay. Why does that happen? Santa Fe model can't explain that. So then what they did is they started to look at things like how do people adjust their behavior because of competition and so forth. And so then they came into this thing that was like, well, a lot of liquidity disappears. A lot of people don't want to make their intentions known until right as it happens. And so you have to think of it as latent liquidity. There is liquidity that is there that we can't see. There's way more liquidity than what you see, typically speaking. Like if I come in and I look at the volume profile, right? The amount traded on the volume profile is almost always like at least 10,000 contracts per price, even if it moves through a price very, very quickly. But there's only ever no more than 3,000 at a time on the actual DOM. Okay, so that's what the difference between resting liquidity and latent liquidity is. So how do I judge what the latent liquidity is? Well, I suppose you could look at the volume profile, but sometimes that could be deceptive, right? Because we could have moved away from an area and then come back an hour later, and now we're building out that volume profile again, even though it's not relevant and whatnot. So what you have to do instead is you just have to watch it as it trades, right? Every time that it ticks down or it ticks up, how much did it take? We trade 2,000, it ticks down, then it comes back up. They trade 2,000 again, they do it again, they do it again, right? And that kind of tells you what. So if I'm trading 2,000 every time that it ticks, that's pretty strong liquidity, right? That tells me, you know, that's an area that might be a little bit more difficult to come through, right? If it's only like 50 contracts every time on the treasuries, that's like unusual. That's like really low. Like, how come nobody wants to put liquidity up in that location? And what happens when that sort of thing happens is you get the liquidity holes, right? It will just get stuck there and it will go sideways and only tick like those 3 ticks for like 45 minutes. And then maybe after 45 minutes, it breaks out and it does something, right? The liquidity heals, and then you start to see more normal amounts of liquidity trade, okay? So that's why I'm watching every tick to see how much it traded. And yeah, if there's a big order there, I do pay a little bit extra attention to those, but I'm more interested in, you know, what does the liquidity there actually end up being? There's a big order there. Maybe it's a round number. I'd expect there to be a lot of liquidity. Does it actually trade as much liquidity as I think it will be? And that kind of tells me a little bit of something about the market. And then, as always, I'm combining that information with my expected flows. Today, FOMC meeting. I would expect the flows to be slightly to the sell side, but pretty nonchalant because most people don't want to take on risk before the FOMC meeting. So I'm not expecting strong flows today, but any flows that I do see, probably slightly to the downside, which is what we have been seeing. And so, you know, if I see a big offer up here, I would expect it to trade. I would expect them to trade that big offer and then maybe have to trade even more than that in order to get price above that. Why? Because probably these guys are selling to hedge, right? And that would be my expected flows. And if I thought that it was going to really lead to a strong down move, then I would take a trade. But in this instance, it wouldn't. In this instance, it's, you know, we sit on our hands today, right? Okay, so that was a lot of stuff. I share that a lot, though. That's how you have to look at it, right? So if you haven't watched my order flow video series, just watch the whole thing. Even if it seems like there's a lot of stuff in there that you maybe already know. Okay, because the beginning of it is very much like, okay, this is what the DOM is, this is what you're looking at, this is what this column means, this is what a large order is, right? But you keep watching it, it kind of all comes together. You want to watch the whole thing, and then you get to the last 2 videos, and we really come into some empirically derived information about the markets that I think can be really, really beneficial to retail traders. And it's those things that I was talking about. You got to predict the orders. Liquidity holes are a thing. Okay, so let me go back. Mr. Legit, I hope you're still there. Please explain the colors on the volume profile. So the volume profile shows different colors based on the point of control and the value area. So the point of control is this pink price. The orange one is the VWAP. And then the value area is colored blue. So outside of that should be gray. Those are outside of the value area. That's what those mean. I don't really pay too much attention to those kinds of things. One thing that I will say is like, if we're in a liquidity hole, if I think we're stuck in a liquidity hole, very high probability that that price will become future point of control. Okay. I'm one of the most important things that I'm trying to do. And it's kind of silly because this isn't a trade. This is more of like a don't take a trade sort of a thing, but it's one of the most useful empirical pieces of information that I can give you that can help you in your trading that you're not going to hear about anywhere else. You want to predict the liquidity hole as soon as you can before it happens so that you don't take a trade in that area, because if a liquidity hole forms, it's not going anywhere. You're just going to be sitting in a trade. So you want to identify that as quickly as possible and just avoid that area. Those areas will become future point of control. So if you guess it correctly, it'll be point of control in the future, and you know that you got it right. What I have noticed is pay attention to high liquidity areas, but in the end, what matters is what is traded on the DOM. The rest is trading version of misinformation. Well, so what you do see on the DOM does have some use and so forth. It's just the problem is, okay, let's just assume for a moment that we lived in some alternate universe where there was a rule that says that you cannot cancel orders. So once you put a limit order on there, you have to take it. Okay. So that would mean that we could trust whatever the liquidity that we see out there, right? Okay. And I see a really big, huge order sitting at the bottom, like at 04.5 or something like that. Okay. In that world, should I take a trade that we're going to hold because there's too much liquidity there and we're going to bounce back up? I say no. And here's why. Because the determining factor in that setup, assuming that we can trust the liquidity that's already there, the real determining factor about how that setup plays out is going to be what the market orders are. If there are enough market orders to fill that liquidity and they still want to keep selling, then they're just going to blow through that. And then everybody that took that got filled, provided liquidity and got filled in that location is going to puke it back out. Right? And that's where you get like crazy trends. Or if there's not enough market orders, they're not going to get through it. And then all of the people that were taking trades on it trying to break through are going to puke and it moves back up. And so the only way that I can predict what's going to happen in that situation is if I can predict the market orders, right? The world that we live in, the real world, is a little bit more complicated because limit orders cancel and add. But ultimately, what we are doing is still, we have to predict the future orders. We have to predict what the future market limit and limit order cancels are going to be. That's why I'm watching it every step of the way to see, I have a certain expectation about what those forces are going to be in the future. And I'm comparing what's actually happening to what my expectation was, right? That means that all of those pieces of information are part of the puzzle. But the one that is the most important is the market orders, right? So again, this is why I love cumulative delta, because cumulative delta forces you to focus on what are the market orders doing. And when you've got cumulative delta pretty consistently going in one direction, very strong autocorrelation, those are the situations where retail traders have some of the biggest advantages. So I love cumulative delta because it focuses you on the right thing. Whereas, these book map charts, I'm not saying that they suck or that the platform sucks or anything else like that. I just feel that it causes retail traders to focus on the wrong thing. It's still a pretty good tool, and it is showing you useful information. It's just not the most useful information, right? The most useful information is going to be information that you know about your specific market, the context of that situation, the news that's going on, the economic reports, the sentiment around it, time of the year, all of these sorts of factors that can help you predict the future orders. That's what's most important. Across the top of the screen, what are your different order flows? Oh yeah, so it's kind of hard to see because it's like dark gray and they're like in relatively tiny text, but basically I have up here, I have ES is here, ZB, CN, ZF, oil, and then this is 2, 10, and 30. These ones are yields. Yeah, so that's basically what I'm looking at. You mostly express the same thought in different words. I guess the thing that I didn't like about what you had said was calling it misinformation. It's not misinformation. I don't view it as misinformation. I just know that like what the market orders are going to be is more important, right? Very helpful. Thanks. Yes, I have the videos queued up. Yeah. Thank you. I put a lot of work into those videos, and I remember when I put them out, I was like, you know what? Like, they're not getting a ton of views at the beginning, but this is the most important stuff that I can put out there, and I'm sure that in the end that they'll be, you know, the best videos on the channel. And you know what? We've been right. Over time they've done really, really well. I have another video coming up that I think is going to be really important too. I just need to write it and do it. But I think I really need to do it this week, so. You have a video on how you trade the DOM? So, well, I mean, if you just barely got in here, you just missed me, like, give the whole spill, right? Or like the abridged version. So if you want the unabridged version, what you got to do is watch the order flow video series that I have. It's like on my main channel page. And then this is linked in some of the later videos, but you can just go to speculatorseth.com/strategy.html. Here, I'll put the link here. Okay. If you go to that URL, that gives you a page where you can sign up for the mailing list. Not that I've ever used the mailing list or sent anything out with it, but it will email you a PDF. And that PDF goes into more detail. And it's not a strategy. It's not like, here are the entry conditions and the exit conditions, and here's how much risk you take on and what your target is, and nothing like that. But what it explains is what we know about the market and how you incorporate that information into developing your own strategy. Okay. So that's the strategy. Yeah, surely they can pull. It doesn't matter for me personally if trading isn't aggressive at that point and then stop runs on the other side, putting on more fire. Yeah. So this is like, I'm way more interested when I'm getting the aggressive, like the market orders just are desperate to get in, right? I want to see some trend. I want to see, well, and the thing that I think we can take advantage of the most is when there's a large meta order, right? Some order out there that it takes them forever to execute, and so they're going to be buying it, you know, still be buying in an hour. That's what I'm interested in. And the best indication that we have that that's happening is persistent autocorrelation in cumulative delta. Or that's one way of reading it. Minix says, for example, now let's see what ES does at 35. The limit orders are relatively more than average there. Yes. Well, so this 670 and 671 at 52.35, 52.36. My DOM is kind of split it out. So one question that I would have in this situation is that liquidity there because that is the current low? Or is that liquidity there just because that's like 2 ticks away? So I can just see there now, because we ticked up 2 ticks, that liquidity did not change very much at all. So that is not the kind of the curve. You'll tend to see this sort of a thing where it's like the liquidity here will be like this. And then it'll kind of trail off a little bit, right? The most of the liquidity will be like a few ticks out. So it's kind of like there's the liquidity like rolls out in front of it. But that's not what these are. They're there because they're the low of the day, right? So then I'm looking at, okay, is it an important level? Is it the low of the day? Is it an important level in the past or something like that? So is it a round number? 52.35 is a round number to help explain why that liquidity is there. And then, yes, if it comes down there, I want to know how much did it take to trade to bust through that price? In this situation, I'm going to bet you that if we get down to 52.35, that the amount that trades there will not be unusual. I think that is just kind of like the robots tend to put liquidity there, but then when it comes and it trades, they lose interest in it. And that area will trade just as easily as any other area, is my guess. If it does come through and it trades there and it takes a lot for them to get through 52.35, then that would be like, oh, something's going on. Somebody wants to buy this today. Somebody making some sort of a hedge or a bet for the FOMC, right? You see what I'm getting at? You smell what I'm stepping in? That's yesterday's point of control. You know what? I haven't been on this rant for a long time. I wish that I had ranted a little bit more about it when I made my volume profile video, but I'm going to rant about it today because I feel like it, and we've got a good 45 minutes left. Okay, I'm gonna pull up. Oh, hold on. Why is it not? Oh, okay, we're okay. If I open up the S&P 500, okay. I'm going to zoom in a little bit here. You might see these vertical lines on my chart. Those vertical lines are showing me the S&P 500 open and close. Okay. The point of control is almost always, and I mean like 90% of the time, near the close. Okay, so here was yesterday's point of control. And it's difficult for me to see exactly where the close was because the closing candle was such a big candle. Okay, but basically there was like a big trade there and then it kind of stopped through. Okay, there it is at the close. Okay, here is the day before. Here's the point of control right here at 52.25. The close of the 7:30 candle. That was the open and the close. But again, you had a big candle on the close. So, okay, here's a better example because the close wasn't so big. So the close exactly was 51.82. That's the point of control. Here's the close for the day before. Yep, it's a blue candle, so it will be the top of the candle, right? Pretty close to the point of control. This one is a tight day. So this one, I think that the liquidity, that the point of control is down there because of it trading through there. Probably. So that one is like the 1 out of 10 that is different. Right? But you can see here's the day before they had a good rally, and then where is the point of control? At the close. So essentially, if you were doing back testing, whatever it is that you think that you see with the point of control, you could substitute that for the close, and all of those stats would be almost exactly the same. So after I show you that, Do you still care what the point of control was? Let me tell you something. Closing prices are very manipulated. Closing prices are very manipulated. Your chart, synthetic dollar index, you go off the ES on it. I don't know what you mean by you go off the ES on it, but I have it's an indicator and I have to add it to a currency chart. So I have it on my currency chart for the euro. And I'm more interested in the dollar index because of what it tells me about bonds. You know, a lot of the time when I'm getting a move in the bonds that doesn't really seem to be followed by volume and I can't explain why it's moving in that direction, I can usually come over here and see the dollar trending in a certain direction. And I might be able to explain why the dollar is moving and thus why this correlation is moving. So that's why having the dollar index is so important. And this is an indicator I built that calculates the dollar index synthetically from the Forex futures. So that 103.53, that's based on the futures prices and not the spot prices. So it's not going to match exactly what the dollar index shows on like the ICE exchange, right? But the moves will be proportionately equal. It's just the prices will be slightly different because the prices in the futures are slightly different. Very, very important indicator. It's one of those things where it's like, how do people trade without knowing what's happening to the value of the currency that they're trading in? Because that's an input into the price of literally everything else, right? Like if I'm buying oil, like and the dollar falls, you know, shouldn't that mean that my oil is worth more dollars? Unless the falling of the dollar also implies a change in the supply and demand of oil as well. But we can sort those out. And they happen. Probably oil is not the best example because oil does weird things with the dollar. But like if I was looking at like wheat, okay, like if the dollar's falling, I would expect wheat to be rising, for instance. Even if nothing else was happening in wheat. To me, point of control is a simple way of showing maximum. No, it doesn't tell you that though. Sorry, I'm getting ahead of myself. You've triggered me, Minik. You've triggered me. Point of control is a simple way of showing maximum interest from buyers and sellers to transact at a price which they felt fair for the moment. By the end of the day, almost most days, market will find its temporary balance for that period of time. That is auction market theory, and that is exactly the thing about auction market theory that is demonstrably false. A price having a lot of volume trading at it tells you absolutely nothing about what price people were most interested in. Does not. The prices that become these point of controls and so forth, it's random. Why does it happen? It happens usually because of liquidity holes. They stayed at that price for so long, the liquidity there was exhausted. It's my livelihood. Love it. The liquidity gets exhausted there. And so it's difficult to move price out of there. Basically, price tends to settle where supply and demand are at their minimum, not at their maximum. So it's the exact opposite. Supply and maximum supply and demand tend to be at the extremes. Okay. But where it settles, where it spends the most time, where the most transactions are, tend to be where supply and demand are at their minimum, which is kind of a counterintuitive thing, but that's what happens, is that the liquidity hole forms. It's hard to get away from that price, but then because it's hard to get away from that price and it trades there for so long, they end up trading more volume there than anywhere else, and that's what ends up making it a point of control or a point of interest, right? But that's the thing, is when you come back to the volume profile on the ES, the point of control that you're looking at doesn't show you that. You might see it when we're coming in down in here, you know, oh, okay, they spent some time in here. I bet you that somewhere in here there was a liquidity hole of some sort. Okay. But the point of control is usually at the close. This one right here, I think, is another outlier day, March 8th, where the close was not at the point of control. But you'll notice that the point of that this area right here where it closed came awfully close, right? Came awfully close. So yeah, I'm not a huge fan of the point of control. If let's say that you like didn't include the last 10 minutes of the market in the volume profile, and what was that point of control? Let's do some stats on that. That would be way more interesting to me, because as it is right now, the closing auction, so much volume trades in the closing auction that basically dominates everything else about what you're getting out of that stat. So it's not telling people what they think it does at all. At all. It's a huge problem with trying to read the volume. And then on top of that, okay, so what is the setup that people talk about with that? Well, if we're very likely to see the previous day's point of control today, right? Well, that's just volatility. Okay, if the point of control is equal to yesterday's close, what are the chances that we trade yesterday's close? In order to not trade yesterday's close, we would need to have an impulsive move that was outside of the normal range of volatility to happen. That's not going to happen very often. That's only going to happen like 10-20% of the time. And that's why you get the stats that people do with a volume profile. But it does not mean all of these things that they associate with it, that this represents balance, this is a price that everybody agreed on or something. It's not. Doesn't mean that at all. And that's important, because what will screw these guys up is they'll come in and they'll say, well, here was the balance point of control. I don't see any reason for us to, for the fundamental price of this thing to be changing. So now that we're kind of like at the previous day's value area high, value area low, I'm going to take a reversal trade. And then what happens is there's some sort of large meta order that is executing that day because of end of month rebalancing that has absolutely nothing to do with what people thought was a fair price, has nothing to do with economic changes today, everything to do with just that's what the redemptions and contributions for that fund were that month, and they have to trade a certain amount based on that, and they're going to blow right through that, because all of those things don't actually mean what you think they do. And that's where it screws people up, right? And meanwhile, I'm sitting over here looking at this and going like, well, it's the last day of the month, so I might see that sort of a thing. And I'm looking at cumulative delta, very highly correlated, and it's in the direction that I predicted that it was going to be. I'm going to take that trade and I'm going to hold it for all it's worth and laugh when all those guys get stopped out. I would explain it as price at which neither the buyers nor the sellers felt the need to be extremely aggressive, says Minik. Well, and I would still take issue with that kind of presentation of it, because this implies that price says something about what buyers and sellers believe, but you have to realize that a large part of it is just kind of random. It's just like that happened to be the price where that happened. The only reason why I would think that price might matter, other than staying out of that area, is that you are going to have a lot of people that have positions from that spot, right? So if I'm looking for, people that maybe held it for a long time and they're coming back to that spot, they might try and scratch it at break even, and I might see something interesting happen after that. Okay. But just don't assign value to it. That's the key thing that I'm trying to say is don't look at those prices and assign something to it. Ascribe something about value to it. That's the important thing. It doesn't tell you anything about value. That's just where a liquidity hole formed. The current prices, and that's the thing is like when we talk about value, right? My opinion is that the current market cannot tell you very much, if anything at all, about value. That you have to calculate yourself. You have to be able to come in and say, and you probably can't calculate it to a general number. You're probably only going to be able to say that we are higher or lower than value, right? And that will matter to make decisions and so forth, because, you know, whether we're above or below value could tell you something about flows that will come in if there's a change, right? Like if the treasuries are too high, then I need to be on the lookout for the Federal Reserve coming in hawkishly and really pushing the markets down. I think that in this situation, it's kind of unique because I think that we are overvalued, but I also think that the market expects the Federal Reserve to be hawkish. So if they are hawkish, I think that they won't move down as much. It's super important to understand the market on the big. Well, what does that mean? Because then the other thing is like with the liquidity hole. Okay, it takes about 45 minutes for a liquidity hole to heal. So when a liquidity hole is healed and then they've moved away from it, they come back to that price. It doesn't matter. Typically doesn't matter. What matters to me is there a large meta order, right? If there's not a large meta order, probably not a reason for me to trade. S&P 500's doing okay here on the open, by the way, for like the first hour. Kind of started out selling, but they were able to dig it out, get it back up to 52.47. Oh man, if the Federal Reserve meeting goes good, like the rally that you'd see in the S&P 500 will be insane, right? Be insane. It might be like last meeting where, like, you know, it starts to rally as the meeting goes on, and then when the press conference is over, it really jumps. Yeah. All right. So I was gonna move on to something else. That's funny that whole discussion about reading the DOM, because we spent a lot of time talking about politics earlier, but that was actually relatively short to the discussion that we just had there. So that's good. That's good. And we got 30 minutes left still. Let's poke over to Zero Hedge and so forth, see if they've got new stories. Kevin O'Leary blasts Letitia James for possible seizure of Trump assets. Kevin O'Leary seems particularly triggered by that one issue. Probably because he's worried it's going to happen to him in the future. I will be here for the FOMC, but I'm going to leave and come back. So I will end the stream. I'll have 4 hours to do real work, and then we'll come back for the FOMC. For lunch, essentially. Trump endorsed Moreno, wins bigly in Ohio GOP Senate primary. O'Leary should absolutely be worried, and so should every American. Well, I mean, I think that if anybody in this, like, who would be vulnerable to that sort of a thing and would actually be targeted for that sort of a thing, I think that Kevin O'Leary would be a real target, right? But the that they would seize his assets and then fire sell them definitely is a very scary prospect. I mean, both for what it would possibly mean for Donald Trump, but for what it would mean for law and politics in the United States. To weaponize the law system in such a way would have such a devastating effect on politics. I don't even want to think about it. If they really, I would hope that another court like the Supreme Court would step in at that point before that happens. But who knows? How many times, you know, one of the things that I think is kind of funny about this, the lawfare, is that part of how lawfare works is keeping you embroiled in long legal proceedings for a long time. It's the time of it that causes a problem. That's why, for instance, you know, these lawsuits didn't all come in 2021, 2022, right? They want to wait a little bit and then, you know, so that it continues to dodge him for, you know, till the election and beyond. Because what if he wins, right? It'll still be the lawfare. But the Supreme Court has seen this and has taken some of these cases on an expedited basis. And so I am kind of starting to wonder, because I kind of think as things stand right now, that's like Donald Trump's only hope, isn't it? But I also kind of think, like, doesn't his son have like $2 billion, and doesn't, like, it seems like he should be able to get a loan for this. But I kind of wonder if he's kind of dragging his feet on it because for some reason he thinks it's politically advantageous for him to not just pay it, or, you know, get the loan and then continue to fight it. Like, maybe he thinks that by saying, oh, I can't afford it, and then having them try and seize his assets, that would expedite it on the, you know, Supreme Court or something like that. Pretty wild, though. But let's see what Kevin O'Leary said exactly. Wait, what a great message to send out to the world. Take a claim where no money was lost, there was no fraud here in the context of people actually losing money. This may be great for the Attorney General, but it is not good for America. Forget about Trump. Do you think this is good for business in New York? Do you think this is good for business in America? Yeah, I don't think it is. Take a law that we used to protect people against buying refrigerators at an overpriced value decades ago and apply it against an individual and then talk about seizing assets like he was in Venezuela or in Cuba. Yeah, you know, the thing that's really wild about it is, like, okay, he bought assets with this and he paid all of the loans and the banks were perfectly happy with it. And then they sue him for supposedly misrepresenting the size of those assets, and then force him to sell those assets to pay for the fine. And what would happen if those assets did end up being worth more? You know, what he said they were, or he got a good price on them, right? More than what the court was valuing them at. That would be funny. I don't know if it would happen, though, because they would fire sell them, so they probably wouldn't get a good price. This has nothing to do with Donald Trump. This is an attack on America, and I don't know how you can look at it any other way. I'm looking for, like, the best soundbite from this, but I'm not really gonna. It's just stuff that he said before. Yeah, here we go. Capital comes to America because of the stability of the justice system. He told Fox's Maria Bartiromo, adding, "This is not stable in terms of many people's eyes domestically and internationally. Seizing assets happens in Venezuela. It doesn't happen in New York. So this is a little scary." It is. Let's see. I'm kind of getting the impression, though, that if something happens, that it will happen relatively soon. So we might not have to wait too long for that one. I feel like maybe I missed a comment. If you had asked a question earlier and I didn't answer it, you can always put it in again, right? That doesn't bother me. I posted that how to read bond auction results, and the guy said this is exactly what I was looking for. Of course it was. Because I know exactly what you're looking for. I know if you are a retail trader and you want to trade treasuries, I probably know exactly what you need. Because at this point, I don't think that there's very few. I'm not going to say there's not, but there are very few that are more engrossed in it than me. And those that do probably aren't going to be reading. Those that do know more than me probably aren't going to be reading your comment on Reddit. So I think I have it's kind of weird to think about that like you have a monopoly on discussion of the treasury market for retail traders, but that's what it is. Does that make me powerful? No, probably not. Probably not. No, I didn't mean to close that. We should come up here and update this. How to use the DOM for a strategy. Problems with point of control and volume profile. You're building an army? I am. Someday, my friends, someday, the government spending will just get too crazy out of control, and the bond vigilantes will return. And that'll be us, and we will hold their feet to the fire. It's going to happen. I think it could happen in our lifetimes. Again, that bond vigilantes becomes a thing. And when bond vigilantes become a thing, it'll be a huge deal because everyday people will be involved in it at that point. It'll be massive. Think of like the GameStop thing, but like so much bigger. I think it could happen. So I prepare myself for that eventuality if it could. One of those things. Like one of the things that what does that mean, bond vigilantes? So bond vigilantes was a thing in the 80s when we were getting high inflation, and they didn't feel that the fiscal or monetary policy was strict enough. So basically, these are people saying the value of your bonds are not worth as much because of your fiscal irresponsibility. And they're trading off of that. And so they called them bond vigilantes. So I think that there is a potential future where bond vigilantes becomes a big deal. And if it did, and if it did happen again in the age of social media, it would be a big deal. And I think that you would probably see a lot of people trading futures, trading treasury futures at that point. So I look at all of this, the trading and the YouTube channel and everything, like it's really hard to make money trading. And a lot of it is kind of knowing when it's your time, right? Like you have the advantage and then just run it for all it's worth. So some of that is just kind of lying in wait and hope that your opportunity comes. Maybe it does or maybe it doesn't, right? But that's where the really big money is made from. Reddit IPO. Oh boy. I did some active trading for market open, and it's calmed down. So the gold squeeze was very good. Oh, you know, I didn't notice over here what was. Oh, you're right. Gold had a pretty good up move. That's curious, and a pretty good up move, not with the treasuries moving. Maybe, but it is moving with the dollar. So this comes back to one of the things that we were reading in Zero Hedge, where we were saying that like, or they were saying that other markets are being more sensitive than the treasuries are to like changes in the dot plot and so forth. So something happening in gold, that's pretty important. Let's put here in our debrief here. Gold squeezed while treasuries stayed put. Now this one I'm gonna have to change. I'm gonna say this is the morning debrief because we'll use this later for FOMC, right? FOMC. Okay, so I did some research into Reddit's IPO. I was reading the SEC filing, and it's funny how much money they're losing. So I'm a little concerned about this one. There are more employees that are not locked in than usual, which is to say, like, normally you're an employee and you own the stock and they IPO, you're not allowed to sell your stock for a certain amount of time. So like I remember when this happened with like Facebook, I think it was, right? It was like they had to wait 6 months, and then everybody was concerned that when that lockup period ended that the price would plummet, and it did. So like this is the same thing with the Reddit IPO, except for that these people would be able to sell immediately. And then on top of that, they are valuing it actually quite low. So it really seems to me like Reddit is trying to get as many people into it as they can at the beginning. Is that because they want to dump it? That's kind of like the concern that people have. Because otherwise, it seems like the IPO is a little cheap. Why does Reddit need to spend 438 million on research? I don't know. Yeah, like one of the things that's really interesting about this particular instance is this unprecedented thing where Reddit is really going out of its way to give the users that have been most involved on the website an opportunity to participate in the IPO. Like I got one of those forms, I filled it out. So I should be able to buy some shares if I want to. At this point, I'm leaning towards no. They're trying to get as many people in on this as possible, and yet the community has zero confidence in it. Like anytime that the Reddit IPO comes up on the Wall Street Bets subreddit, like the first comment is buy puts. Nobody believes in it. Nobody on Reddit believes in the Reddit IPO, that participating in the Reddit IPO will be a good investment. None of them think that. Which probably means that they're either going to be spectacularly wrong and you should go against the consensus, or they're going to be spectacularly right and this IPO is just going to be dismal. And I do look at some of the things, like how much money they're paying some of their executives and things like that. Doesn't seem to me like Reddit is spending its money very wisely. And everybody says like, oh, but it could be worth a lot in the future because of all the data that they hold. Well, yes, but like, shouldn't they already be putting that out? Shouldn't they already be selling that kind of data and making oodles of money from it? Why do they need to IPO at all? They'll short squeeze Reddit. I do think there's a good chance that like you have an IPO, the day will be relatively lackluster, and then after that it will sell. And then all of those shorts will get squeezed. And it will go to like what the market thinks is the correct valuation. Oh man, I'm excited to see the IPO though. I don't know what's going to happen, but I think it's going to be exciting. Is that what the ticker is going to be? Is RDDT? Well, when it comes out, we'll add it to the meme stock category on my watch list. Actually, maybe now is a good time. We got 5 minutes left to kind of go back through our list and see what the one-day moves are. Big one in my mind is, it will SMR be down again? Okay, well, Rare Earth Resources is up like 3 cents. A lot of the things, so like yesterday, the meme stocks were down pretty big. Now today, in one day return, they're doing pretty good. Especially Thwack, 10%, good grief, almost 10%. Magnificent 7, a little bit more mixed. Tesla, actually, the biggest winner over there. That's a little bit of a surprise. And what were we looking? Oh yeah, SMR down another 24%. Wow. Wait, I gotta look at this chart, man. Dude, watching the new scale thing go on has just been like, good grief. Wow. That is such an ugly, those are the 2 ugliest down candles I think I've ever seen. That's crazy. Are they going to come all the way back to $3? Because I feel like I could maybe justify buying it at $3. That's nuts. Good grief. I kind of thought that we would continue to come back, but I thought that this day would just kind of be like a small one. Or maybe it would have a tail, you know? It would be a little bit more gradual of a fall. Oh yeah, I've read it. They sent me all this stuff. I read all about it. I've done a little bit of research too about like, okay, like what have similar companies gone for in the valuation and everything. So I'm saying like the valuation that they're giving actually sounds a little cheap to me. But it's concerning that it seems like they're trying to get as many people to buy in as possible and that they're all sitting there waiting to sell. There's some things about the way this is set up that I don't like, that are concerning to me. Sleep Number up 7%. They're doing really, really good lately. SNBR. That's actually not that crazy. Dude, maybe I do. You know what? I've had their beds for a long time and I really like them. I really like them. But I don't know why they're doing so crazy good right now. That 7% seems a little crazy to me. Well, Super Micro down, but not insane like it was. That one was getting a little crazy. Energy Complex down today. Oil overall is down today, so. Only JP Morgan up in the financial space. And what about our dogs of the Dow? Pretty lackluster. You know, I remember Dogs of the Dow being like a really good strategy, but it has not really performed that well as of late. So, hey, Soundhound is only down 0.66%, and I'd call that one a win. And then we're back to what we talked about earlier with the evil companies, with Boeing leading the way 1.91%, and the biggest loser being Anheuser-Busch. So, coming in and looking at the individual stocks is more interesting, and I hope more important than ever, because the index isn't telling you everything that's going on. Like, it only tells you what the Magnificent Seven are doing, and the rest of the market is a lot more mixed. All right, guys. Federal Reserve meeting at 2 o'clock Eastern time. We will be back, so I'll see you guys in 4 hours. In the meantime, stay excellent, team.